So, hello, third year students. I hope you are staying safe and isolated. Welcome to the home classroom. And I'm sure you'll be seeing this at your home classrooms. Today, we're going to revisit just the end of the stock sheets to talk a bit about the additional terminology and how these concepts are related to each other. Briefly touch on brands and the nature of the assignment, and that'll be it. It'll be a pretty short video this week. So we'll be doing this every week to clarify, hopefully, any questions about material. So the one vocabulary unit we didn't get to that's fully on this page was in relation to these concepts, 2C. So I just want to go over the answers to this. So number one says a company that spreads investors' capital over a variety of securities. That would be a mutual fund. Mutual means together. So it's the combining of those different instruments into one and then the spreading out across. So it's the mutual investment of many that's then spread across various institutions for investment. Then you have an investor's selection of securities. This is called a portfolio. That's true for stocks and other investments, the portfolio of investments. Generally, the wider the portfolio, the better your situation and the less risky. Number three, a person who can advise investors and buy and sell shares for them. That's a stockbroker. Then we have three different types of stock that are similar because they're stocks, but slightly different in nature. The best is number four, we call a blue chip stock. It says a stock in a large company or corporation that is considered to be a secure investment. Of course, these days, if you've done your stock assignments during the past week, you'll realize that more or less, no matter what stock you've chosen, it's probably tanking right now as the markets have continued to go downward. But the blue chip stocks will eventually be considered to recover without major issues. Large companies with a long history like Nike, Apple, these are the kind of companies that almost seem like they will not fail no matter what. So that's a blue chip company. And hopefully it goes up in earnings. So you get dividends and you get capital gains because the stock increases in value. Number five is stock in an industry not much affected by cyclical trends that offers a good return, that's capital gains, but only a limited chance of a rise or decline in price. Actually, I'm sorry, that's you get good dividends on this stock, and it's not likely to grow a whole lot. And that's why we call it a defense stock, because it's kind of conservative. Like, you know that it's there. You're not going to make a whole bunch of capital gains by selling it off. It has a consistent value that might increase slightly over time, but you're going to earn a little bit every time. You're going to get your dividends. Six is kind of the opposite of that, a growth stock. The growth is in capital value. So number six, a stock which usually has a high purchasing price and a low current rate of return that is expected to appreciate in capital value. It's pretty clear in the definition. Number seven, a wholesaler in stocks and shares who deals with brokers. This is a market maker. This is particularly true when a new stock is entering the market. You make a market for it, you underwrite it, and then you seek out brokers who then seek out individual clients. Number eight, financial organizations such as pension funds, etc., insurance companies. These would be called institutional investors. They are institutions, they are large investors. And a mutual fund is a type of an institutional investor. So they're interrelated and their definitions are very close. And then finally, number nine, the use of information not known to the public to make a profit out of buying or selling shares. This is insider trading, and we'll come back to that. On the back of this sheet, there's a topic called ethical investments. You want to hang on to this sheet because we're going to come back and discuss this, or at least I'll talk about it like this, and then hopefully there'll be a chance for us in the classroom, if things go well, to talk about this. It's a pretty interesting conversation. And insider trading is one of those items. Then last, we have this vocabulary. 2D, it says there's a logical connection among three out of the four words in each of the following groups, which is the odd one out and why. So this is a good activity because it increases our understanding of each of these concepts and how they relate to each other. In number one, you have annual report, external auditors, financial statements, and stockbroker. And stockbroker would be the outlier because the other three are basically legal requirements of a stock company, and stockbroker just doesn't belong. So the stock company has to do these three things, and that's just out of the picture. Number 2 says blue chip, defensive stock, growth stock, and rights issue. This is pretty clear. We have 3 types of stocks that are normal stocks, and then the rights issue is a special issue, so it's unrelated, or not as closely related. Number 3, it says bonus issue, dividend, over-the-counter, and shareholder. Here you would cross out over-the-counter. It doesn't belong. The dividend and the shareholder and the bonus issue are all related to the creation of a bonus issue where the dividend is turned into a stock, which is issued to the shareholder. Number 4, you have creditor, market maker, shareholder, and stockbroker. We would cross out creditor. We just mentioned in the definition for market maker above that they work with stockbrokers to create a market. The stockbrokers work with shareholders, and that's the chain. On the back, you have number 5, debt, equity, share, and stock. Here, share and stock are more or less irreplaceable. You can take one and the other, and they're the same thing. Most of the time, equity means value, and shares and stocks have value, and debt does not. Debt is that representation of the modern monetary system. And regardless of what stock you choose, it has value. So as opposed to the other markets we've been talking about, it has equity. It is a share in the company. It is value and not debt. Unlike the money market instruments. So number 6, face value, market value, nominal value, and par value. The outlier here is market value. You would cross it out. That's the value as it fluctuates according to the market. And the other 3 are more or less the value that's written on there or the base value that an instrument was introduced with. Number 7, we have float, liquidation, share issue, and underwriter. Liquidation doesn't belong here. We know that the underwriter guarantees a certain price for a stock. The shares are issued and then they are floated on the market. So that's the beginning process for a new stock. Number 8, we have institutional investor, insurance company, liabilities, and pension fund. You would cross out liabilities. We mentioned institutional investors, and insurance companies and pension funds are types of institutional investor. That's a very clear link. And then finally, number 9, mutual fund, portfolio, risk, and underwriter. And mutual fund, like I mentioned, is a shared fund and often makes up a wide combination of investments that reduces risk, and you have a wider portfolio. So that's that. So the second element that ends stocks for now, and then we lead towards our next assignment. Now, the first part of that was simply related to branding, and that was this page that I posted. We know what brands are. This is kind of just something to get us introduced to our assignment for this semester and to approach looking at companies not only from the investment point, although also from the investment point, but also as a consumer in relation to reputation, which is important because we're moving towards ethics in a few weeks. And so this is all interrelated in the coming weeks. So there were some preview questions, and really this introduces what we call the 4 Ps. This is one way that companies themselves define themselves, and that also investors, consumers, competitors also evaluate companies. And so it's product, price, promotion, and place. And there are some activities here that get you thinking about, companies and why you use them. And often it's, we might say, oh, we really like the product. Perhaps the promotion has some impact on us, perhaps the place where you can buy the product. Is it available on the national level? Is it available only in certain locations? Is it available in specific types of stores and not others? So, and of course the price, right? It's always part of it. So you had a little bit of a reading here, and I'll just go over the answers to the questions. As far as the ordering of paragraphs, number 1 is the case against brands. Number 2 is the importance of brands. Number 3 is brands past. Number 4 is advertising brands. Paragraph 5 is the new consumers. And the one that's not used is guilty. All right. So in this article, the corporations and brands are not guilty of anything, although there is a case made against them, which is number 1. So in the past, and when we look at these true-false questions, it was relatively easy in the past to create a brand. This is true. Buying a branded product did not cost customers more. This is false. Brands come with imaging and a price tag. Brands were developed for the international market. This is false. They started as domestic brands and then made it to the international market where we are now. The government closely controlled the markets at home. This is false. They were pretty wide open. And once you made it and had control of that market. Maybe not in a monopolistic sense, but you were powerful. And finally, brands deterred other companies from entering the market. Of course, that's strict competition. And if someone's very powerful, then it prevents, smaller enterprises from competing against them. So that's that reading. And then finally, the last thing that you had to do this week was to read an article called Made in Serbia. This is there's nothing from this that's going to be on any kind of colloquium. It is simply a kind of a comical article to introduce into the conversation investment in the Serbian context. So this is an article by Momo Kapoor in which it clearly states that Serbia has no recognizable international brands. This is written about 15 years ago or so, maybe 10 years ago. So the situation has changed a little bit then. And maybe we have more internationally recognizable brands. In a way, your assignment is based on that. It's up to you to introduce Serbian brands and to choose a company based in Serbia that you would invest in. Small, large, it could be a small business, it could be a medium-sized business, it could be a large business, whatever works for you. So it does declare that there's Kaymak and there is Inat. At the time of the writing of the article, Kaymak was only available at markets and it wasn't, available outside of, the Piazza. Now it is. It's branded. So it's been branded now. I think President was the first to do it, but now you can buy various types of Kaymak in stores with names on them. So it has been branded. Inat has also been branded. There's a wine that's named Inat. There's a restaurant that's named Inat. So these terms have now been put to branding use. So that's where it comes to your assignment. I've stretched it out from the original 4 Ps to cover all 7 Ps because you want to make sure that in addition to how a brand is recognized, as an investor, you're concerned with how has it performed in the past, which is the 5th P. How is it performing currently in relation to profits and such? That's the 6th P. And 7th P, prognosis. What do you think in potential? Here there may not be a lot of expert opinion. It's up to you to explain, based on what you found in the other categories, what kind of potential that particular brand, that particular business, whether it's small, middle, or large scale, can provide and can offer in terms of potential for you as an investor. So that's it this week. I'll be posting new material on next Thursday. And just like this week, I'll give you a few days to digest that material and then post follow-up commentary in video form like I'm doing now. So good luck, stay healthy, and I will post new material and new commentary soon. Goodbye.